Hey guys, I just wanted to take a couple minutes, come on here, kind of talk about the housing market. So, what's going on in it? But more importantly, why is this happening and what can you do to better position yourself? So, we are all seeing these headlines out there. There's not enough housing, inventory's down, prices are up. What is it going to be and when is this going to give? But what I feel like people aren't taking the time to do or really even understand is why is this happening and why is this the case right now? So I'm hoping to be able to clarify a little bit of that for you. So your four kind of driving factors, the demographics, the housing push that's coming in, your population growth, the lack of homes that were built post 2008, the interest rates absolutely are playing a part into this, and the market stability and kind of where we are at. So increasing wave of household formations. Yes, we know that there's been a lot of population growth. You see the strong group of millennials, post-millennials, or Gen Zs are coming into this market. They are coming in hot, and they are the ones that are kind of really driving these prices, especially on this first-time homebuyer range. That 33-year-old you can see there, which actually used to be our average age last year of your first-time homebuyer. That has actually even come up, I believe, to 36 now, which is just really showing your part of interest rates and affordability and price playing a part on these first-time home buyers. Why there are so many less homes out there, your most important part, if you are looking at it for what we were doing, like I said, post 2008, coming out of that recession and that housing crash, we built 5.8 homes between 2010 and 2019, which is certainly causing this now. You look in your previous decades before, and you're going between 20 and 30 million homes. And we just have this massive deficit that there is plain and simple not enough homes out there for the population that we have that needs to buy them now. Housing and rentals, I would say, on that. And it does seem to just continue to keep getting worse. We are not seeing much of a light at the end of the tunnel with that. It does seem to keep compounding year after year as, like I said, those demographics of those buyers are kind of entering into this market. Yes, new home sales are surging. As you can see, they are coming up. Unfortunately, the builders just can't keep up with it. We have lots of clients that have gone that route, and we are coming up, but we are nowhere near the amounts that we need to close this deficit here and get that in more level market. I believe they say we need about 4 million homes to be able to get to that. They're building them everywhere you can find a patch of land, it seems, these days. But we're also still dealing with some of the labor constraints, materials, and a lot of your buyers just cannot afford those new construction homes anymore. Well, let's see. As my friend Mark Brace up in Grand Rapids, Michigan, explains this as, it is a damn market, and I cannot find a better analogy for that. So you've got your sellers that are kind of in your interest rate jail. These interest rates are playing a huge part in this. They have them where they're not wanting to give up those 2% and 3% interest rates to be getting a mortgage now at upper sixes, lower sevens. So they're holding onto those homes tight. As we said, they have this huge influx of buyers that have come in, but you also have some that are being held back. That's because of where those interest rate constraints are for them. It is affecting their affordability. Those prices are up right now. So that is certainly playing a part to where we kind of say, well, we're about to have this huge surge. So these mortgage rates, as inflation comes to come down, we are projecting, which, as we know, these projections over the last couple of years, if anybody could have a crystal ball and predict it correctly, that would be wonderful. But all we can do is go off of what these experts are telling us. So we're looking at, by the end of this year, they're thinking we're going to be down to about 5.8. Second quarter 2024, 5.5. It's a massive difference from where we are here. So when those rates do come down, yes, we might have some of those sellers that are coming out of their interest rate jail to come into the market, but also keep in mind they're probably buying too, which kind of neutralizes that. We are also going to have that huge wave of buyers that are going to be coming into this market that were kind of sitting on those sidelines. So just something to keep in mind. Another kind of underlying factor that we're not really looking at is the tremendous amount of equity that Americans have in their homes right now. I pulled just the top 20 cities in there. You guys, we're upwards of 50-60% appreciation, which is just crazy. US is just sitting on so much cash. And we're seeing since 2020 a $10 trillion increase in equity. So that is playing a huge part. That's your market stability there. When you're seeing headlines of could we be seeing another crash when these appreciation levels are coming in, you just really need to think of all those other driving factors. It is nowhere near the driving factors that we saw back in 08. That's really driving that. So when we have 2 out of 3 Americans either have 50% equity in their home or no mortgage at all, you guys were sitting in a pretty stable market. So I do hope that that does help. If you guys have any questions, of course, you can always reach out. Phone number, email, website is there. Our team would love to kind of help navigate you through this process if you are thinking about being in this market so you can be competitive and take full advantage of the opportunities that are out there. Or if you just kind of want to understand it better, feel free to reach out. Hope you guys have a wonderful day.